I want to show you guys how you guys can set up your charts on a day in and day out basis to be ready for tomorrow, have levels ready to trade in the most simplest way that we can almost do this, right? So price action is king, supply and demand is king, everything else just kind of fits in, right? All these other indicators, all of these other moving averages, they're kind of just indicators. They're kind of just, you know, where should we be taking profits? Where should we be looking for bounces? Where should we be looking for rejections, and this so forth and so forth, right? So what I'm going to do for you guys in this video, I'm going to set up our charts in a very clean manner here so that we can be able to read price action and be able to find setups that we can trade and make money on a day in and day out basis. So like I said, today would probably be the most perfect day to kind of go about this, because in all honesty, today was an absolute shit show as far as price action. The stocks really didn't go higher. They really didn't go lower. I want to touch on that a little bit here. You know, and it was a very difficult day to trade. However, if we kind of set up our charts in a manner that's going to, you know, not allow us to be so anxious or have so much FOMO when we come into the markets, and allow us to see the price action very clear, you'll start to see that realistically there was only a couple of setups that we realistically could have taken today and potentially made some money on. So again, let's just dive into this. So first things first, what I want to do each and every single day I come into the market is I want to look at the previous day's highs. I want to look at the previous day's lows, and I'm going to make it very simple. I'm using Thinkorswim platform, which is with TD Ameritrade. So again, that's the platform that I'm going to be charting on. I'm going to walk you guys through how I set up each and every single thing on my chart, and you're going to tie this all together and try to find some trades at the end. So what I want to do here is I want to mark out Friday's highs. That was the previous trading day. So I'm going to take my price level line, and again, let me show you guys kind of how I do this. I'm going to right click here where I want it. I'm going to add a drawing. I'm going to go over to this little money symbol with a line, and now I can drag this price level line here, which is going to give me a price of where I drop this line. So what I'm going to do is I'm going to mark out the previous day's high price, and then I'm going to go to the bottom here and I'm going to find what is the lowest price, including the wick, right? So not just the body candle. I want to know where's the lowest price at on the wick, and then I'm going to put another add a drawing, and I'm going to go here to the money symbol with the line under it, and I'm going to drop this underneath the lowest price from the previous trading day. So now with this, we can start to see the previous day's high, we can see the previous day's low. Now we've essentially created a range, right? So this range is going to act as a little bit of supply and demand. What we need to have happen for stocks to move higher is we need to break the previous day's high. We need to confirm that. For example, if we're going to be scalping off of a 5-minute time frame, what I'm going to need to see happen is I need price action to break that on a 5-minute candle. I'm going to need that 5-minute candle to close over the previous day's high, and whatever that high price is, that becomes my pivot for taking a long position so that the stock can go higher and potentially we can make money. Same thing with the downside. If the stock price breaks the previous day low, I need that 5-minute candle to close below that, and then I need the next candle to confirm that. As soon as the next candle confirms the new low price, that's when we're going to go short. So what I'm going to do now is I'm going to mark out the pre-market highs and lows. So this light gray box here is after hours and pre-market. What I want to do is I want to take another price level line and I want to mark out the pre-market lows. So if I go to this pre-market low price, you're going to see that that price is 382.29. The stock that we're looking at is the Triple Q's index. I'm just using it because I trade a lot of the stocks like Tesla and Apple and Microsoft and Nvidia, AMD. All of these stocks are located inside the Triple Qs. A lot of people like to trade the Triple Qs as well as the SPY, those 0 days till expiration options contracts. So let's just do some charting on the Triple Qs. So now that we have our previous day high price as well as our pre-market low price and our previous day low price all marked out, the next thing I'm going to start to do is I'm going to look at today's price action, because as we come in to start the day, I need to see, have we taken out the previous day's high? Okay. Have we taken out the previous day's low? At this point in time, we need to know, excuse me, we need to know where is price action currently sitting. So if I kind of zoom in here, okay, zoom into a little bit of the pre-market, you're going to notice here at 5:45 in the morning Pacific Standard Time, we actually break the previous day's high price, okay? So that should already be telling you that potentially there is a long setup here if we can confirm, okay? So what I want to do now is, because it's a little bit higher than the previous day's high price, there's really no sense in having the previous day's high price sitting a little bit below the pre-market high price, because of the fact that we've already taken out that level, okay? So price action, which is what they're doing to the candlesticks here, they have moved price action past, okay, they've moved price action past the previous day's highs, and they've put in a new high. So what I want to do now is I want to adjust this level here to the pre-market highs, okay? Very, very simple. There's going to be another indicator that we need to add to our charts to kind of give us a little bit of a roadmap to kind of see which direction the stocks are trading and which direction maybe we should think about trading. So what we're going to do is add the 20 SMA. And for those of you guys that already trade with me, you guys know how I use the 20 SMA. So I'm going to go ahead and add it onto the charts. If this is your first time watching the video, first time learning how I trade, my Discord link is down below. I also offer a course showing my whole entire strategy. That's at evolutiontraders.com. Become a lifetime member. You guys can see it. So again, I'm going to go up here to studies. I'm going to go to add a study. And then I'm going to go to all studies, and I'm going to scroll down to the S's, because what I want is a simple moving average, or actually I think it's on the M's. Let me see here. I forget. So if I go down to the S, oh yeah. So we go down to S-S. I scroll over. Oh, I hate when it does this shit. So I need to go to simple moving average. However you want to add it onto your charts, it doesn't really matter. So you can see here, I'm highlighting, maybe make sure you guys can see that. Simple moving average, that's what we want to add to our charts. We're going to click the simple moving average. Again, I like to kind of adjust my simple moving averages. So what I'm going to do is, as soon as it throws the simple moving average on my screen in Thinkorswim, it's going to automatically put the 9. I want to change that. So I'm going to click on that. Again, let me show you guys how to do that. You're going to right click on your simple moving average. You're going to go to edit study. You're going to click it. What you're going to then do is change the length to 20, and I want to show breakout signals. Now, again, some of you guys have asked me, how exactly do I show breakout signals if you're trading on another platform? I don't know. I've been trading on Thinkorswim now for over 6 years, 7 years going on now. This is the only platform that I really know how to use besides TradingView, and I don't think TradingView really has it. But again, correct me if I'm wrong, they might. So we're going to go to show breakout signals. We're going to click yes. And then I like to change the width a little bit because I'm old. I can't really see that well. And I like it to be clear, and I like it to be big in front of my face. So I'm going to change the width from 1 to 2. And then the color is okay. We can leave that like that. Maybe we can go to 3. Let's see how big this 3 is. 3 is not too bad. So I'm going to leave my width at 3. Now what I've got on the screen is I've got my previous day high price as well as my pre-market price now, because I adjusted that. I've got the pre-market lows, and I've also got the previous day's lows. The blue line on my screen is called the simple moving average. It's the length of 20. So it's the 20 SMA. Again, if some of this is very, very basic, I'm just speaking so anyone can understand. Okay. So those of you guys who know what I'm talking about already, just kind of bear with me, right? So now you're going to notice some green arrows, right? And you're going to notice some red arrows. You're going to notice a green arrow. You're going to notice a red arrow. The only thing this is doing is just identifying to me. It's just indicating to me. It's like an alert saying, hey, price action has now closed above. Price action has now closed below the 20 period moving average, which is a 20 SMA. I'm just letting you know that. That's all it's doing, right? It doesn't mean that as soon as it goes red, you need to short. It doesn't mean that as soon as it goes green, you need to buy long, right? So if you're playing options, as soon as it goes red, it doesn't mean to buy puts at whatever price. And as soon as it goes green and it gives you a green arrow, doesn't just mean to buy calls at whatever price. There's a way that we need to use it in our advantage so that we create ourselves a little bit of an edge, right? So we can eliminate some of these setups and we can find the setups that can be a little bit more profitable. Now, again, like I've already outlined to you guys today was not a good price action day. So there was a lot of failed moves. So again, understand that not every day is going to be perfect. Not every day is going to be a winning day. Not every day is going to have clean price action for us to trade. So what we would be looking for now is a couple of things. Now that we've got the pre-market lows and the previous day's lows and the pre-market highs as well as previous day's highs all marked out on our charts, we've got a few areas of supply being the top, a little bit of demand, which is our support here at the pre-market lows, and we've also got another demand zone here at the previous day's low. So what I want to do is what I will start doing looking into the day here as we start to get going here. There's one of two ways that I'm going to look to trade the day. I'm going to look for price action to break pre-market highs or previous day's highs, whichever one is higher, because for example, if the previous day's high was still above the pre-market high, then I'm going to use the previous day's high. But in this particular case, the pre-market has already taken out the previous day's high price. So we're looking at the pre-market high price now being our top supply. That price was 384.62. So what I want to see have happen now is two things. I want to be trading over our 20 SMA, okay? So I need that green arrow to be giving me a green arrow on, right? So I need to see this over the 20 SMA. And then what I need to do is there's one of two ways we can play this, okay? The first way we can play this is we can let this 20 SMA candle close over. And then we have to understand that we do have supply, which is going to be resistance at 384.62. Okay, so the orange line is going to act as resistance. What we can then do is take a call here at 640 when this candle takes out this candle. So if this is our reason why candle here that closes over the 20 SMA, okay, and this is our confirmation candle when we break this previous high price, we can take calls here. But here is why today was not a good trading day and why today added a lot of fake outs. So in this particular case, if you would have taken this long play, you would have been getting in long at around 384.37, and it goes to a high price of 384.88. It gets rejected and then immediately comes crashing back down. That's the name of the game. You're going to lose trades. You're not going to win every trade, but how do we protect ourselves? Because the first thing we want to do is protect ourselves. We can be wrong, but we cannot blow up our accounts. We cannot be so wrong to where we're just losing all of our money that we're putting into the market. So when this candle closes back below the 20 SMA, again, it's going to tell you price action, short-term sentiment has changed. It's changed. The momentum is changing. So I use this 20 SMA as a momentum gauge, right? If we're trading over the 20 SMA, I'm using it as upwards momentum. So I want to be playing long. If we're trading below the 20 period moving average, the 20 SMA, the momentum is down. So I want to be playing down, right? So in this particular case, we do get a setup to the long side that does get shaken out, and you would have gotten stopped out for a small loss. Now, there's another way to play this. Some people like to play it this way to be a little bit more safe. What you can do is wait for price action to break previous day's high or the pre-market high. Again, whichever one is higher, that's the one we're going to go with. So in this particular case, that 384.62, as soon as we break the pre-market high price, we need to close over that price. So for example, you see us here put in a high price of 384.88. However, we don't close over the pre-market highs. We just break price action. We break price action, but we close below. So in this particular setting, there was no long trade because what we would have needed to have happen was this 6:40 a.m. Pacific Standard Time candle to close over. And then we would need the next candle to confirm the high price, and that's when we would be going long. Okay, so if we use this candle that also broke the pre-market highs and put in a high at 384.88, we would need the 645 candle to break the pre-market highs again, or previous day's highs, whichever one's higher. And then we would need it to close over that price, okay, over that supply zone, okay? And then we would need to have the next candle confirm that high. So again, let's make it very simple. If we were looking to take calls, right? We're looking to play long. What we need to see have happen is we need a candle to close over the pre-market highs, okay? So if the pre-market highs is sitting at 384.62, we need a candle to close over 384.62. As soon as that happens, now we have a reason why to enter the trade, and we're looking for the next candle to confirm that new high. When that new high gets confirmed, that's when we're putting our money into those call options, and we're going to play to the long side, okay? And then we're going to use a 1 bar stop, which you'll get to a little bit later. As soon as you guys join the Discord, you guys get familiar, but I like to use a 1 bar stop on my reason why candle. So whatever the reason why I'm getting into the trade, I'm going to put my stop loss at that 1 bar, and that's just my stop loss. Or I will trail it with any close below the 20 SMA. I'll just get the hell out of the trade, right? So in this particular case here, if you were playing the setup underneath the pre-market highs and you took this confirmation of the 20 SMA long, more than likely you probably would have gotten stopped out. However, that doesn't mean that the strategy doesn't work. It doesn't mean that, you know, you got to find something else to trade, because I've played these thousands of times and they go for $1, $1.50, $2, and you make money. Today was just, again, a great example to use because it was a horrible price action day. So we really need to work, right? We really need to identify good setups. So if you were going to wait for the previous day high and the pre-market high to break, you would need that 384.62 candle to get broken, and then you need to close over that, and then we need a following candle to confirm that, and that's what will be going high. So if you look at what happens once we got rejected at the pre-market highs here, 384.88 was the high price. We immediately closed below the 20 SMA. Okay, now the light bulb needs to be going off. Now what you need to be thinking is, price action broke the pre-market high, which broke yesterday's high, which was Friday. However, there was no continuation. The bulls, right, the buyers are not showing that they're strong enough to keep this price higher. Now we're using the 20 SMA as our short-term momentum sentiment, right? We've closed below it. So what is that telling you? That we need to be thinking to the short side and potentially be playing into the next level of demand. Stocks are going to trade from a level of supply to supply and demand to demand. So if we break a level of supply, we would be looking at the next level of supply to potentially play into. An example, if we break below a level of demand, we would be looking for the next level of demand to go down to. So in this particular case, when we get rejected at pre-market highs and close below the 20 SMA at 6:45 in the morning, what we need to have happen is the next candle needs to confirm. Okay, what does that mean? If we have a low price here of 383.87, this candle needs to take out the price of 383.87. As soon as that happens, we're going to buy puts, or we're going to short the stock, whatever we're playing. We're going to go short here, and we're going to play this down into the next area of demand. Now, your next area of demand in this particular chart setup is going to be the pre-market lows of 382.30. Again, it does not touch 382.30. It comes about 18 cents shy of touching that. But what I tell all my traders is, if you get a beautiful setup like this and you happen to catch this setup from 383 all the way down here, and you're now trading at 380, or from 383.80s all the way down to 383, you've made 80 cents on the initial move. Now you've made, you know, close to $1. If you can make anywhere between, and I'm going to be completely honest, if you can make anywhere between 75 cents and $1 on the triple Qs, that's a home run. If you can make anywhere between 60 and 80 cents or $1 on the SPYs, that's a home run, especially if you're just looking for scalps, right? Of course you want to make more money. Of course you want these things to go all day. But again, you have to look at this. We're going to go also up to studies. Okay, we're going to go to studies. We're going to go to all studies, and we're going to come down to the A's, and we're going to put an ATR at the bottom of our charts. Now, the ATR is just an average true range. It's going to give us an average true range of what these candles are moving. So for example, myself, I'm a 1-to-1 trader. What that means is, if I'm going to risk $1, I want to make $1. If I'm going to risk 50 cents, I want to make 50 cents. Being that I'm going to use a 1 bar stop predominantly on my trades, I'm only risking about 1 bar. So I'm only risking like the true 1 ATR, right? So what that means is, if this is my reason why candle here at 6:45, I want you guys all to pull this up on your chart. 6:45 Pacific Standard Time. I'm going to give you guys time to pull it up. We're looking at the triple Qs, we're looking at the 5-minute time frame, and I'm looking at 6:45 in the morning. Okay, We should all have that up now. So my stop loss is going to be at 384.88. Okay. My entry is going to be down here at around 383.84. So I'm essentially risking $1 on this potential move. Now, at this point in time, it's giving me an ATR of about 50 cents or so. So that's telling me if I'm going to risk $1 and make 50 cents, I'm going to make 0.5 on my money. If I can make $1, I'm going to make a 1-to-1. That's a 1-to-1 risk to reward ratio. If I'm going to risk $1 and I'm telling myself that this level here, right? Let me pull up this drawing tool. If this level here is my absolute hard stop on a potential short, and that's $1's worth of risk, if I can make my ATR of 50 cents or $1, I've got to get out of the trade. I consider that a winning trade, and that's how I trade. When I make my 1-to-1 R to R, what I then do is sell half of my position. So for example, if I was trading 10 contracts of the triple Qs, I'm immediately going to sell 5 at my ATR, which is around 50 cents, 60 cents. And if I can get $1, right? I get $1 because I already know I'm risking $1 on this potential move. If I could get $1, I'm out. Okay. And that's the way that I trade. And then I just look for the next setup. Or sometimes that's good enough to just stop trading on the day. When you're trading things like Tesla or Nvidia and you make $1, $1.50, $2 on 10 contracts, you're talking about making $500, $600, $700, $800 in a matter of minutes, right? In a matter of minutes. Now for me, I'm never going to post up extravagant gains where I'm posting, $5,000, $10,000 trades. For me, an average win for me could be anywhere between $400 and $1,000. But for me, I think that's very, very good when you can start to identify multiple of those $400, $500, $600 setups each and every single day. It really starts to add up. It starts to compound. And again, I've been doing this full time for around 6.5 years. So it works, right? As long as you stick to the strategy. So again, 1 bar stop. This becomes our pivot where we're looking to get into the play. This becomes our confirmation. So our money, all right, we're buying puts on this candle, and then we're trying to get that ATR, that one ATR, right? Which at this time, if you look at it, right, if I look at the 650 candle when I'm entering the play, and I look at the current ATR at around that time, it's around 45 to 50 cents. So if I start to make 45, 50 cents on the way down, half my position is gone. I'm just telling you that automatically. I already got 1-to-1 on that ATR. If I'm risking $1 max pain and it continues on my runners and I get close to $1, I'm out. That's exactly how I play it, because I also know that the pre-market lows is here. And in order for us to go lower, we would have to break the next area of demand, correct? Stocks are going to move from demand to demand and supply to supply. So if I'm going to take this short position, right? If I'm going to take this short position, I need to be taking profits into the next demand. And you can see what the price action did here. It came down a little bit, tested this pre-market lows. It bounced, it came back down, it bounced, it came back down, it bounced, it came back down, it bounced. Now, what happens when the day starts to get choppy like this here, and it gets choppy like this, and it gets choppy like this, and like this? We have to start identifying that if we did not make money on essentially the one of two only good moves on the day, the other move being here, look at when we actually came down and tested the pre-market lows. The last 5-minute candle absolutely exploded. Once we closed over the 20 SMA at 383.13, it went from a price of 383.13 all the way up to 383.80s. So it moved about 70 cents, 75 cents in a matter of 5 minutes. That was a hell of a trade to end the day. But again, there was a lot of area in here that was very, very choppy. So what you need to start identifying that as the day goes on and we don't break pre-market lows and we don't break pre-market highs, and essentially we're trading in the middle. Let's say, for example, you didn't take this short trade, okay? Let's say, for example, you didn't take it. Let's say, for example, you took the long, you got stopped out, you lost a little bit of money, you were hesitant, you never took the short position. Once you started to identify here an hour into the market, an hour and a half into the market, 2 hours into the market, that we still haven't broken the previous day's high or pre-market high, or we haven't broken down the pre-market lows or previous day's lows, you have to tell yourself, we're trading with inside of a range. Today is not the best day to trade. I need to stay out of the market. because the more you try to stay in here and you try to force trades in between the pre-market levels, all you are going to do is chop yourself up. All you are going to do is give your money away. We do not want to give our money away. We want to protect our money, and we want our money to work for us. Besides this opening short play here, and if you were looking for a trade, which I don't think a lot of people were, but if you were looking for a trade this late in the day, were probably the only real setups that you were able to make a little bit of money. There was a short setup here at 12 o'clock that went from a price of 383.7s down to 382.34s. So this was about a 75-cent move here. If you give yourself a 1-bar stop here, you would have made 75 cents. You would have already known to take profits into this demand, right? Because what is this level here, right? This orange line. This is demand, okay? This is demand, okay? It is also pre-market lows, right? So that's our demand, okay? So we need to be taking profits into demand, wait for demand to break, and then take profits into the next demand. That's how we play that. However, there's no setup here because this candle never confirms. There's no setup here because this candle never confirms. So that long play is out. That long play is out. We would have never taken those trades. This setup confirms. 1-bar stop here. This would have gotten stopped out for a loss. Again, loser there. This confirms here. 1-bar stop. Would have made money into demand there. This never confirms. There's no trade there. The long setup doesn't confirm. There's no trade there. This setup confirms, and I don't think a lot of people would have taken profits here. This was probably a loss, so there's 2 losers there. So as of now, we have 2 losers. We've got a winner here. We've got a loser there. We've got a winner here at the end of the day, and we've got a winner here. So even if you would have taken every single setup, the worst case scenario, you would have broken even, or you would have made a little bit of money. However, as a trader, we are not trying to sit at our computer screens for 8 hours and take every setup. My best advice for you guys is to trade between 6:30 a.m. Pacific Standard Time. Again, I'm in California, to around 9 a.m. Why do I say 9 a.m.? Because this 9 a.m. is the NYC lunch hour, and price action gets extremely choppy until around 10 a.m. Okay. Again, that's not to say that you can't catch a move after that, but if we are constantly day in and day out sitting there waiting and waiting and waiting all day for a setup, the probabilities go down that we're going to make money. We're probably going to chase trades. We're probably going to force trades, and we're going to give away money. So for me, it's just for me, like I'm speaking from my experience. I make the most of my money in the first 2-3 hours of the market max, right? So between 6:30 in the morning and around 9 in the morning, that's where the bulk of my money is going to come from. That's where the majority of my winners are going to come from. I notice I tend to get stopped out and chopped up a lot more later in the day when I do trade later in the day. So if we were looking at that, maybe we take this position here, we take a small loss here, we take a winner here, and we just kind of stop on the day. Right? Worst case scenario, we take one more short setup, here around 9 a.m. or, even this long. But again, once we're not breaking out, once you're seeing that we're not breaking out over our pre-market or previous day, and we're not breaking down from our pre-market level going into our previous day, you got to start thinking that moves are going to fail. So do I really want to take every single scalp play? No, because the majority of the time you're probably going to get stopped out. The only time I would be looking to take a trade, like let's say, for example, after this trade is done, and now I'm sitting here and I'm watching this and I'm watching this and I'm watching this, I'm probably not looking for a trade until we break down pre-market lows. You need to close below that, and then I'll take the confirmation down, or we break out, and then I'm going to take the confirmation long. So essentially, until we break out, we need to sit on our hands and be patient. Again, this is a long-winded video. I hope you guys found some value in this. If you did, like, comment, subscribe. But this is a great way that you guys can set up your charts on a day in and day out basis and start trading supply and demand and pure price action. It's very, very simple to use. You don't need a lot on your charts. Again, as you start getting familiar and as you start taking trades, if you start kind of wondering, why are things stopping here? Why did I get stopped out? How come I was green and then all of a sudden we reversed? I have a lot more to this trading strategy that adds in a lot more supply and demand zones. However, why I'm teaching it like this is because this is all you need to actually make money. And when you start adding more demand zones, more supply zones, and you're not comfortable looking at it, it can be very, very confusing. So a lot of times, especially if you guys have watched my YouTube videos, you guys will see where I'm using my big boy chart and it's got like all kinds of lines on it. For me, I see through the lines very, very clearly. For me, it's not confusing. For me, I know where I should be taking profits, where I should be looking to get a trade. But for a lot of people, it's just too much confusion. This is very simple. You can trade this on a day in and day out basis, and you can make tremendous amounts of money. Like, for example, I'm just going to give you, since this video is already long enough, I'm going to give you an example from Friday, how you guys would have been able to make money. So what I'm going to do is I'm going to clear this drawing set off. This is like a little bit of a bonus treat here. So what I'm going to do is I'm going to look at Thursday's highs and lows, okay? So if we look at Thursday's highs, this is what you would have been doing going into Friday, right? So once the market closes on Thursday, you're going to do your homework for Friday. So what we're going to be analyzing is Friday's price action. So for example, look at Thursday's highs, and if you look at Thursday's lows, now we come over to pre-market and we see that our previous day high and our previous day low is pretty close to each other here. And this is, we're a long ways away from taking out Thursday's highs. So there was no real level to kind of mark out in pre-market, since there was a bigger gap here, because the pre-market low going into Friday was sitting down here at 376.37. We had a price of 375.28 for our previous day low. So again, even if we just mark out the pre-market lows and then you mark out your pre-market highs, I want to show you guys something here. Okay, so now you have previous day high, pre-market low, previous day low. Okay, got our 20 SMA on the chart. Now let's zoom into Friday. And what were we looking for in the previous on today's price action, guys? Where the hell did I do with it? So we're looking at Friday, right? So look at Friday's price action. So if this is pre-market high and this is the previous day's high, right? Look what happens when we break pre-market high and then confirm on this candle. So what do we need to have happen? Oh, why does it keep doing that? What do we need to have happen, guys? You guys should already be knowing. Let me get back to the day here. So look at what happens when we close over the pre-market highs, right? So if we're going to play the pre-market highs, we're going to let the candle close over the pre-market highs. Then we're going to take the high wick. This becomes our pivot where we're going to look to get long. Look at 6:40 a.m. on Friday. 6:40 a.m. on Friday, we should have been getting long on the triple Qs at a price of around 381.75. Around 381.75 goes to, what's the next level of supply, guys? That previous day's high, which was Thursday's high that we already had marked out on our charts. So we already know where potentially we want to take profits. We want to take profits into that previous day high. So look at 381.75 goes all the way to a price of 384, goes all the way to a price of 384.40s, 384.50s. Guys, we are talking about a 3-4 point run in a matter of from 6:35 a.m. all the way to around 8:55. And when did I say I want to stop trading? Around 9 a.m. You would have essentially caught $3 on a confirmation break over the pre-market highs. So not every day is like today. You're going to find multiple days that are like this, where you're going to make tremendous amounts of money. And as long as we can be smart and be patient and sit on our hands on days like today, or kind of just maybe take one trade and feel out the market. If it's not there, it's not there. Identify we're in an inside bar day. Great. I know this video is long. I hope you guys learned something. Hope you guys gives you a little bit more confidence to take these trades. Here's how you can set up your chart. Again, it's previous day's high, previous day's low, pre-market high, pre-market low, and then the 20 SMA. And then all we're doing is whichever level is higher between the pre-market high, and if there's a big gap like this, like on Friday, look at the big gap from the pre-market high to the previous day high, we can leave that, okay? We can leave it like that. In this particular case here, on the on Friday's pre-market low to the previous day low, I would want to see it get through the previous day low before I go short, okay? Off the bell, I'm talking about off the bell, because obviously we're not trading down there, so you know, we wouldn't be looking for it. We essentially traded higher all day and then went sideways. Hope this video helps.